What's up, you guys? This is Junior Trader, and in this video, we are taking a look at Tesla stock options analysis. So we'll go over the data and we'll identify how the options chain is looking like for the expiration of this week, at least where the data stands as for this day, and what, in my opinion, technically, with a confluence on the technical side of Tesla, what type of options may make money, what type of options may go worthless, and where's the frequency of traders sitting, and what type of traders are trying to play smart, what type of traders are mostly gonna just burn their money. We'll talk about all of that in this video. Again, just my opinion, only for education purposes. You are solely responsible for your own financial decisions and outcomes. All right. Okay, so with that, guys, let's begin. And before that, I also want to let you know that if you can, and if you have already, check this out, the video that I did in the morning today, that Tesla stock was the bullish scenario for this week. I already explained the technicals in this video, so if you can check this out, this video will be a head start for you. Otherwise, I'll still provide you a bit of background here to start off with. So let's start with that. So Tesla, all in all, in general, guys, we have it in the downtrend, and we have a lower highs, lower lows, and we also have a pivot here on the lower side, right? We are downtrending. Again, check that video out of mine. That will tell you a lot more, but this is a very high level, just a principle understanding for you right now. If Tesla needs to start coming back to the upside, it has to get above certain areas. To begin with, 170 to start off with and close the day above that, and then 50 days moving average. But for stronger bullishness, I want it to first above 175 in the coming days without falling much further. This is on the basis of where the price is right now. Otherwise, we are watching this level of 160 and 164 for a potential inverted head and shoulder. So we have to see how the price action does around that level then, okay? So that's your high level gist. Again, check that video out over here if you want to know more about in-depth details here, all right? So let's go here to the options data now. So first of all, let's look at the chart as the graph where the frequency of the traders are, right? So black is the last closing price, the black vertical line, green are the calls, red are the puts for the expiration of this coming week. Right off the gate, you can see we have huge calls sitting at $200, and at the same time we have huge puts sitting at almost very same amount, open interest at 150. Price is closer to the puts rather than to that spike in the calls. Other than that, I do see a spike at 160 as well here, and 170 puts are already in the money by by a couple of dollars. And then 180 calls, that's fine. But what I'm seeing is the balance, at least, of the power between calls, between bulls and the bears this time on the option side, where we do have two extreme ends, and then it's divided between the puts and the calls like equally. I do see a sudden drop after 150, and then things starts at 145 and 140. But these things may change as days goes by. But this is as for right now where the data is. So let's talk about $200 calls first of all. All right, like is that even a possibility right now going into this week? What the price action is telling us. So that means 5 days, right? 5 days from now. And how much Tesla has been making average range per day? Almost $6. You can see here on my dashboard down here, right? 6 times 5 is $30. And where price is right now, 100. This is a very simple way of doing it, okay? But I'm just telling you, if you want to take some data, right, what you can speculate out of that. So 168 plus 30, almost 198. But is Tesla going to go straight up all those days? No, right? But we will have pullbacks if it even starts to go up. So if I just talk about the $200 call here, guys, that is out of the picture, regardless of what Tesla does, at least for now, unless something, a big catalyst comes like this, that we had Elon with the China news, right? Unless that is not happening, or catalyst something like that, it's very hard for Tesla to come to $200. And not just that, Tesla is in the downtrend right now. So for going to $200, we have to change the structure as well first, as soon as possible, like starting Monday itself. We have to get above 175. Then also we have a little bit of an uphill battle, because if I take it to the hourly interval, once we are above 175, you are dealing with another major resistance of overhead resistance, that is of 200 hours moving average. And then we have a newly resistance formed at 180 as well. So there are resistance level by level that Tesla has to go, which are new resistance, right? So it's a little bit of an uphill battle. So in my opinion, $200 calls are not looking good. This spike, unfortunately, and many calls might be rolled over from the previous weeks or so, but $200 calls, for if the expirations has to happen this week on these, which is this is the data for this week expiration, they most likely are going to go worthless. $150 puts. Let's talk about that. That's where the spike is. And then we'll talk about other options as well. Let's go to the daily interval. And that's the reason we have spikes on these extreme ends or a little bit further out on the price, because those are the cheaper ones. So traders usually like to go for the cheaper ones, but that doesn't mean price is going to go there, right? But because technically, can that happen? Or what is the possibility or likelihood? So if you want me to put a percent of the likelihood of those $200 calls options happening, I would put probability like 5% maybe. All right. Now, but 150 puts, where is $150? It's right around over here. All right. Direction is definitely towards 150 of the stock price. Doesn't mean it's going to happen, but direction is there. We do have $164 and $160 as a potential support. We have to see the price action there, also at 20 days moving average. So far, yes, the direction is there. Again, like it all comes down to if $160 is going to hold or not. If that breaks, guys, yeah, we do have another significant level sitting before that, 152, but I would say there is more likelihood compared to $200, at least where the price action is right now, for $150 puts to happen. Not saying that it's going to happen, because options doesn't tell you it's going to happen, but it's the direction is looking it that way. And if you want me to put a number on this, I would probably put it like 40%. There's a probability that $150 puts options may happen. So, but anyways, technically, options doesn't tell you that price is going to go. They just tells you where the traders are betting their money. But if you ask me, 150, the likelihood, it's more than $200 calls option. It's also falls within that $30 range from where the price is right now, right? So just keep that in mind. Now, though, but just because there is the spike over there doesn't mean those are the options only playable. Let's take a look at the closer ones, right? And for the closer ones, let's go over here, the chain, options chain, because we'll take a look at the premiums as well, how much they're going for. So let's take a look at, first of all, a call option that is at, let's say, 172.50 cents. And it's going for $2.10. So you have to be at almost 175, let's say, to break even. Well, at this point, guys, any calls, to put it simply, for the calls, if Tesla can recapture and close above 50 days moving average on Monday, that is tomorrow, you have more likelihood of making money on the calls regardless of whatever you trade. But I would say not more than $185. Try to play, if again, it's up to you. I'm just providing my opinion. Not even, well, sure, maybe 185 is the max though, in my opinion, because it will take a lot of energy out of Tesla to turn around the structure. The safer would be 175 to 180 calls in this range from where the price is right now. If the structure starts to confirm upside, that is, if we go to the hourly interval, that is, if it starts to even recapture these levels like $170, right, and so forth to the upside. And let me adjust something here on my indicator. And guys, if you need access to my tools, links are in the description below of this video. So like levels like 170, then 172, and so forth. If Tesla can starts to recapture, you have some potential to play those calls to the level of 175, and then Yeah, well, 180, but 200 hours moving average sitting there. So you get my point. There's a lot of right now hesitation to play calls on my part. I trade the shares, right? I don't trade options, but I'm providing if you're an option trader, what would you do in this case? What are your room ballpark areas to play with? And if let's say Tesla on Monday closes above 175, that opens up quite a strong door, but we want to get above 200 hours moving average. But I would say don't play any bet on the call side, maybe 180 sure, 185 sure, but not more than that. But things are not looking like right now in the direction of calls. Just remember that. All right. Anything beyond 185, I don't think it's worth it. But again, you do whatever you want to do. But right now, price action is not showing me any of that. Tomorrow, if how price evolves, things may change, and we'll talk about that. All right, let's take a look at one of the puts or some of the puts as well here. So let's take a look at this 165 to make money on this. Let's say the price has to go to 162 at least, right? I'm just taking one out, so a little bit cheaper in the middle, right? So 162, let's see. Well, so for the puts, things are looking in the puts direction, right? And where the price is right now, things are going in that direction. So yeah, I think to be just safe on the safer side, anything above 152 puts until 152, they are fine to play because that's the direction price is in. So yeah, 162, where is it? It's somewhere here. You still have to want Tesla go below 160 to lose this support zone. And but yeah, technically it's more in that direction right now. I mean, you can try in the money, but look, 170 calls to make money on this has to be 165. Again, it all depends if this is the money you are risking as well. This is until you're holding expiration. If you are trading, you have to see how much the degradation is happening, how much options are worth at what time. That's a different style of trading as well if you're day trading options. If you are holding until trying to trade options until expirations, then this is how much it's going for right now that you are expecting to hold. Right. And so you're putting a huge down payment as well. As that's the thing, right? If you go in the money, you are risking more money as well. For example, 172, it's gonna, yeah, guys, no matter what the look at it, no matter which number I pick from here, it's gonna come to very close to the a little bit lower than the current closing price, but it's going to be very close. 180 is what, 178 all, sorry, 168 almost you have to be in the money for, right? So, but you are then risking a lot more as well. So you get my point, right? And these things gonna get very expensive soon enough, and you will start losing money even on trading it if it starts to go against you, right? Because this value will go, right? So but anyways, that's something up to you how you want to do that. But yeah, this is what I'm seeing. So on the call side, maybe anything is playable if Tesla gets above 170 first to begin with, and 100 until 180 there's a possibility. Not saying it's going to happen, we have to still see the technicals, but technicals are looking more to the downside. And if Tesla is continuing to fall, stays in the downtrend, then anything until 155 I would say is playable on the put side. All right, guys, that's it for this video. If you found it helpful, valuable, hit the like, subscribe, and with that I'll see you in my next videos, guys. Take care. Bye.